Good morning, this is the Danielcode report for the 19th of September. My name is John Needham, I'll be your host for this report. Well, we've had a marvellous week's trading. If I told you that the Danielcode picked the low of the S&P on Thursday night to within 2 or 3 ticks, you'd probably think that was pretty cool. If I told you you could add to that the Dow Jones, the Nasdaq tracking stock, the QQQ, the Russell, gold, silver, Huey, oil, and the high-end bonds on Tuesday, all of these major markets have turned exactly at their Danielcode numbers or within ticks. Now, I don't mean points, I mean ticks. For many of them, we've had special buy signals or sell signals for our clients. But what I want to do now is run through the charts of these major markets with you and let you see how amazing these Danielcode numbers are. What the Danielcode numbers do is they give a sequence of price levels at which markets have a high probability of turning, and that probability is something higher than 85%. You'll see from the charts I'm about to show you that this is information that you just need to know. All of these numbers are published on the Danielcode website for clients. Many of them are also published in Financial Sense, for whom I write, or in Oracle UK, or in Traders Journal or the Forex Journal, which also publishes my work. I want to share these with you to show you that markets are in fact not random, they're highly predictable, and they turn where they're supposed to turn. So this week, for you people involved in equity markets, you'd have heard all sorts of yap about support levels and critical levels that needed to be held. Panic, panic, panic. In fact, when we look at these charts, you'll see that nothing of the sort. Markets have been completely organised. They've been tiptoeing down the Daniel numbers. Daniel numbers are published days, sometimes weeks before on the website. You can see them all at www.thedanielcode.com, and we're going to start looking at some charts now. The first chart we're going to look at is the Dow Jones Industrial Index. This is the index I'm using. The futures are just as precise, and on this particular index, the important thing for you to know were Wednesday's lows and the big turn at Thursday, absolutely vital. Wednesday's low, we were looking for 105.88. That was close enough to the low for Wednesday. More importantly, on Thursday, we were looking for 104.61. The market went down with the usual little bit of morning panic stirred along by the media, and it made its low at 104.59.8. Well, let's call that 104.60. 1 point from the Daniel number. In fact, there's a conjunction of Daniel numbers there, which we call 2 degrees of Daniel numbers. But you'll see on this chart it made its low precisely 1 point away from the Daniel number, turned around and roared up 560 points. This is information you have to know. Let's move to the next chart now, which is the S&P, and it's really interesting because you can see how it's been tiptoeing down the Daniel numbers. It's been acknowledging every Daniel number this week. On Tuesday, you can see that it sat on 1168. I bought that bottom very heavily. I think I just about turned the market myself. On Wednesday, the low 1154, right on the Daniel number. And on Thursday, of course, the all-important turn. The next number we were looking for was 1134, 70 odd. On the futures, the number we were looking for was 1136.80. The futures low was 1136. Market then turned around and rallied 73 points. That's about 18,200 per S&P contract. We'll move now to the Nasdaq tracking stock, the QQQ, and again, I won't belabor the point other than to tell you that the Daniel number we were looking for was 39.45. Clients knew it. You could have known it. The market put in its low at 39.50 and then rallied nearly 21 points into the close. The next chart is the Russell. This is now no longer on CME. This market, futures market's now traded on the ICE exchange, and we were looking for a Danielcode number at 667.80. The market went 1.5 points through that, turned around, rallied 51 points straight up. Also in this week, we've been trading in crude oil and bonds. I'll show you now the crude oil chart. You can see it's been in a long-term decline since July, and the number we were looking for was 90.55. On Tuesday, it made its low at 90.51, just 4/100ths away from the Danielcode number. We also issued a T3 buy signal to our clients, which is a time turn shorthand that we use to alert our clients. The market turned around and rallied up straight to the first annual number retracement at 102.23. For bonds, the next annual number was 123.30.5. Tuesday's high was 123.27.5, just 3 ticks from the Danielcode number. And we can see here that in these major markets this week, every market has turned at its Daniel number within ticks, within hundredths of a point. All of these numbers are published for our clients. If you've been in the camp that's been sitting watching media, listening to uninformed people saying, oh, it's a crash, oh, it's the end of the world, worrying about spurious support levels that they thought were getting breached, they were getting breached because they're not real. Unless you knew these Danielcode numbers, you didn't know where the market's real support and resistance was. So I hope you've enjoyed this little video and you can see where the markets have been. All of these charts are available at the Danielcode online, which is www.thedanielcode.com. Please go and have a look at them, print them out, enjoy them, think about why markets always turn at the Danielcode numbers.